Hi, it is Thursday morning, 18th of July, and it is 8 a.m. in New York. This channel is Drips Media, and I will be covering financial news from New York stock exchanges before markets open. The regular trading for the U.S. stock market opens at 9:30 a.m. My name is Daniela Drips. I will be quickly covering yesterday's closing data, main indexes, and the key companies. Please follow us online.
Good morning. This is Drips Media, lid from New York. Drips Media, the revolutionary digital service that transforms the way you stay informed. With Drips Media, you get real-time news delivered in dynamic short video clips, keeping you updated on the latest headlines as they happen. Our cutting-edge technology curates and condenses top stories. Whether you're on the go or just need a quick update, Drips News ensures you're always in the know, effortlessly. Stay connected, stay informed, and experience news like never before with Drips News.
Turning our attention to the broader market, the S&P 500 index couldn't maintain its upward momentum. Closing yesterday at 5,588.3, this represents a decrease of 1.4% for the day, snapping a three-day winning streak. The tech-heavy NASDAQ experienced an even steeper decline, ending the day at 17,996.9. That's a 2.8% drop, also reversing 3 consecutive days of gains. Clearly, investors are reassessing their positions in the tech sector, perhaps taking profits after the recent run-up. We'll be keeping a close eye on these indices to see if this is just a temporary blip or the start of a larger market correction. Now let's delve into the performance of some tech giants which have been influential in the recent market movements. Apple, a bellwether for the tech industry, saw its shares decline by 2.5% yesterday, closing at $228.90. This downturn halts a three-day streak of gains for the tech giant. Similarly, Google, another heavyweight in the tech sector, experienced its second consecutive day of losses. The search engine giant's shares fell by 1.6%, ending the day at $181. Microsoft, a major player in software and cloud computing, also mirrored this trend. The company's shares dipped by 1.3%, closing at $443.50, marking its second consecutive day in the red. These declines in tech giants like Apple, Google, and Microsoft suggest a potential shift in investor sentiment towards the sector. It remains to be seen whether this is a temporary pullback or a sign of broader concerns about valuations in the tech industry. Amazon, a dominant force in e-commerce and cloud computing, also felt the heat. The company's shares closed at $188.70, reflecting a 2.1% decline for the day. This downturn puts an end to Amazon's three-day winning streak. Looking at the data, it's clear that Apple's recent performance aligns with the broader tech sector trends. The company's five-day change stands at minus 1.8%, mirroring the negative sentiment in the market. However, despite the recent pullback, Apple has shown resilience in the longer term. The tech giant boasts an 8.7% gain for the month to date and an impressive 19% increase since the beginning of the year. This positive year-to-date performance is further highlighted by the fact that Apple's shares have risen on 7 out of the last 10 trading days. This suggests that while short-term fluctuations are inevitable, the long-term outlook for Apple remains positive in the eyes of many investors. NVIDIA, a leading player in the graphics processing unit (GPU) market, faced a significant setback. The company's shares tumbled by 6.6%, closing at $118. This marks 3 consecutive days of losses for NVIDIA, signaling growing concerns among investors. Meanwhile, Tesla, the electric vehicle manufacturer, also experienced a downturn. The company's shares closed at $248.50, representing a 3.1% decline for the day. This downturn halts a 3-day winning streak for Tesla. Lastly, Amazon's decline yesterday extended beyond just ending its winning streak. The 2.6% drop, bringing the stock to $187.09, reversed a full day of gains for the e-commerce giant. This negative trend for NVIDIA is particularly concerning given its stellar performance earlier this year. Despite the recent downturn, NVIDIA's year-to-date gains remain substantial at 138%. However, the recent losses have eroded some of those gains, with the stock down 4.5% for the month to date. Looking at the short-term trading activity, NVIDIA has experienced gains on only 4 out of the last 10 trading days. This volatility underscores the growing uncertainty surrounding the company's future prospects. Investors will be closely watching NVIDIA in the coming days and weeks for any signs of a potential rebound or further decline. Shifting gears now to the financial sector, which showed a mixed bag of results yesterday. Bank of America saw its shares dip slightly, closing at $44. This 0.3% decline reversed 2 days of gains for the banking giant. On the other hand, J.P. Morgan Chase exhibited strength, with its shares climbing 1.5% to end the day at $216.90. This marks 3 consecutive days of gains for J.P. Morgan, suggesting growing confidence in the financial powerhouse. Similarly, Morgan Stanley continued its upward trajectory, closing at $107. This represents a 0.7% increase and marks the 3rd straight day of gains for the investment banking firm. Turning to the payments sector, both Visa and MasterCard saw positive momentum. Visa shares rose by 1.3%, closing at $272.70, and extending its winning streak to 4 consecutive days. MasterCard also enjoyed a strong performance, with its shares climbing 1.7% to close at $451.20, effectively reversing the previous day's losses. Finally, American Express rounded out the financial sector with a modest gain of 0.1%, closing at $250. This marks 3 consecutive days of gains for the credit card company. These recent gains for Bank of America are noteworthy, as the stock has climbed 5.4% over the past 5 days. This positive momentum extends further when we look at the month-to-date performance, with Bank of America showing a solid 10.6% increase. Zooming out even further, the banking giant has enjoyed a remarkable 32% surge since the start of the year. This robust performance underscores the resilience of the financial sector amidst the current market volatility. Looking at the short-term trading activity, Bank of America has experienced gains on 6 out of the last 10 trading days, indicating a positive trend. However, yesterday's performance did snap a 2-day winning streak, suggesting some potential hesitation among investors. Now, let's turn our attention to the cryptocurrency market, where we saw some interesting movements yesterday. Bitcoin, the world's largest cryptocurrency by market capitalization, closed at $64,718.90. This represents a 0.9% increase for the day, effectively reversing the previous day's losses. On the other hand, Dogecoin, often referred to as a meme coin, faced continued downward pressure. It closed at 10 cents, marking a 0.8% decline and extending its losing streak to 3 consecutive days. Ethereum, the second largest cryptocurrency, showed signs of recovery, closing at $3,435.30. This represents a 1.4% gain, reversing 2 consecutive days of losses. Bitcoin's recent performance suggests a potential return of bullish sentiment. The cryptocurrency has gained 9.3% over the past 5 days and boasts a 3.3% increase for the month to date. Zooming out further, Bitcoin has experienced a remarkable 53% surge since the beginning of the year, highlighting its resilience and long-term growth potential. Examining the short-term trading activity, Bitcoin has closed higher on 6 out of the last 10 trading days, indicating a positive trend. This upward momentum, coupled with yesterday's reversal of losses, suggests that investors might be regaining confidence in the cryptocurrency market. This was Drips News. Please follow us online.